Best Forex strategy for consistent profits. Achieving consistent profits in Forex trading is a goal for many traders, but it requires discipline, a solid strategy, and effective risk management. Below, I outline a simple yet effective strategy based on trend following and risk management, suitable for both beginners and experienced traders. This explanation, designed to take about 10 minutes to read, will guide you through the key components of this strategy. 1. Strategy foundation, trend following. The Forex market often moves in trends, where prices follow a specific direction, up or down. A trend-following strategy involves trading in the direction of the market trend rather than against it. This approach is effective because it capitalizes on the market's natural momentum. How it works. Identify the trend. Analyze a currency pair's chart, i.e. EUR, USD, GP, JPY, to determine if the market is in an uptrend, downtrend, or sideways movement. Tools. Use technical indicators like moving averages in MA, 50-day MA and 200-day MA. If the 50 MA is above the 200 MA, it signals an uptrend. If below, it indicates a downtrend. Entry point. Enter a trade when the price moves in the trend's direction, such as when it crosses the moving average or bounces off a support resistance level. Example. If EUR/USD is in an uptrend and the price bounces off the 50 MA, take a buy position. 2. Choose the right time frame. Your trading style determines the best time frame. Swing trading, 1 to 4 hour daily charts. Ideal for medium-term trades, suitable for consistent profits. Daily chart, best for beginners as it has less market noise and clearer trends. Tip, confirm the trend on a 4-hour daily chart and use a 1-hour chart to find precise entry points. Risk management. Risk management is the cornerstone of consistent profits. Without it, a single bad trade can wipe out your gains. 1-2% rule. Risk only 1-2% of your trading account per trade. For example, with a $10,000 account, risk no more than $100 200 per trade. Stop loss. Set a stop loss for every trade to limit losses if the market moves against you. Place it near recent support resistance levels. Risk-reward ratio. Aim for at least a 1-2 risk-reward ratio. For example, if you risk 100, your profit target should be 200. Example, if you buy EUR/USD at 1.2000 with a stop loss at 1.1950, 50 pips risk, your target should be 1.2100, 100 pips profit. Technical analysis tools. Enhance your trend-following strategy with these tools. Moving averages. As mentioned, use 50 MA and 200 MA to identify trend direction. Relative Strength Index, RSI. RSI indicates overbought, above 70, or oversold, below 30 conditions. Use it to gauge trend strength. Support and resistance. Identify levels where the price tends to pause or reverse. Mark these on your chart. Candlestick patterns. Look for patterns like hammer, doji, or engulfing to confirm entry and exit points. Trading plan and discipline. A solid trading plan and discipline are critical for consistent profits. Trading schedule. Trade during active market hours, such as the London or New York sessions, when volatility is high. Trading journal. Record every trade, entry, exit, risk, and outcome to learn from mistakes. Discipline. Stick to your strategy. Avoid impulsive trades driven by greed or fear. Backtesting. Test your strategy on historical data to ensure it works effectively. Psychological discipline. Mental discipline is as important as strategy in Forex trading. Avoid greed. Don't overtrade in pursuit of quick profits. Accept losses. Losses are part of trading. Don't take them personally. Patience. Wait for high probability trade setups. You don't need to trade every day. 7. Example trade setup. Let's say you're trading EUR/USD. Chart analysis. On the daily chart, the 50 MA is above the 200 MA, indicating an uptrend. RSI check. RSI is around 50, confirming the trend strength. Entry. On the 1-hour chart, the price bounces off the 50 MA with a bullish candlestick. You buy at 120.50. Stop loss. Place it at 122,050 pips below. Target, set it at 150, 100 pips above, achieving a 1-2 risk-reward ratio. Outcome, if the trade goes in your favor, you earn 100 pips. If it goes against you, you lose only 50 pips. 8. Additional tips. Demo account. Practice the strategy on a demo account for at least 2 to 3 months. Lot size. Start with small lot sizes, e.g. 0.01 or 0.1, to minimize risk. Avoid news events. Stay away from trading during major economic news, e.g. non-farm payrolls, interest rate decisions, due to high volatility. Continuous learning. Read books like Trading in the Zone or take online courses to improve your skills. Why this strategy works. Simplicity. It's easy to understand, even for beginners. Flexibility. Applicable to any currency pair or time frame. Risk control. Stop losses and risk-reward ratios, limit losses and maximize gains. Consistency. Trading with the trend increases the likelihood of profitable trades. 10. Final advice. Consistent profits in Forex trading require time, practice, and patience. No strategy guarantees 100% success, but combining trend following with strict risk management can lead to long-term profitability. Start small, learn from your mistakes, and take time to understand the market.